Hello everyone, my name is Dhruv Sahani, and in the course of financial management, today we are going to cover the topic of requirement of financing. So, requirement of financing. Before getting into the requirement of for financing, we would need to understand what are the activities that require cash flow. Basically, the circulation of cash. So, in cash flow from operations, like in day-to-day activities, we need cash. Business require cash or circulation of cash. Like for the raw materials, we purchase raw material from outside and we pay cash to them. And for the finished product, we charge cash from the customer. Right. So this is cash flow from operations. Cash flow from investment, like we invest into some stocks or bonds. So at that point of time, there is flow of cash to the outside party when we purchase stock, or when we purchase this shares, bonds, debentures. So that is our investment, right? And when we sell these investments, we get money back. And cash flow from financing activities. In the financing activities, when we expand our business or we start a new venture, so at that point of time we are doing cash flow, and that new business can earn us profit, right? That new business earns profits to the businessman. So in this form, there is cash flow from financing activities. As I told, requirement of financing includes starting a new business entity, expansion of business, or day-to-day operations. So these are the financial institutions we are going to cover, like the financial institution and their role in providing finance to a business. So basically, we need to look at various financial institutions from which these different forms of institution and the significance in terms of supporting financial managers in their quest of raising funds. How do financial managers raise funds through these institutions? So, like central banks, or in India, we can say Reserve Bank of India is responsible for overlooking the action of other formal financial institutions. RBI provides guidelines for preparing broad monetary policy and acts as a guide for other financial institutions to follow due diligence. Right. So RBI provide guidelines for the other commercial banks to operate. Like how should they operate? What are the guidelines to which they need to work upon? And second institution is retail and commercial banks. Retail and commercial banks like Indian Bank and Bank of India, these are our commercial banks. These bank has a role in offering financial products and services to the customers. Commercial banks provide lending services to large commercial organizations. These provide deposit, savings, and other financial instruments for public usage. Provides internet platform for basic banking services. Like today, we know we have internet banking services on our phones, and we can access it through our laptop. And another financial institution is credit unions. Basically, credit unions serve a specific region, and the operation is provided by the members of a particular group, is a form of informal credit. Basically, credit unions provide informal credit to the people, to its group members. Investment banks don't work as a normal retail or commercial bank. They help commercial organizations to raise capital through different lending mechanisms or raising capitals. They help access of credit from pooled funds like mutual funds or capital market. Another financial institution is brokerage firms. Brokerage firms help commercial organizations to raise capital through sale of securities or bonds, assisting the organization in raising funds through trading support. Insurance companies. Insurance companies is another financial institution. Indirect support. These provide indirect support to the investment by sharing or transferring the risk of investment or methods of raising capital. Mortgage companies. Basically, these provide scope for raising capital in return for control over assets of matching valuation. Like in bank, we provide collateral for taking a loan. In the same way, here we raise funds, we raise capital by giving control of assets to others. So sources of finance for small scale industries. These are like long-term capital support from financial institutions. National Small Industries Corporation and Small Scale Industries Corporation provide support to them. They get seed capital from government support, financial support from relatives they can get for starting a new venture or a small business of theirs. Support from retail banks for working capital, right? So support provided by these financial institutions are as follows: like financing of activities, their basic activities like transportation and all, like the basic thing. support and technological skill, like the finance can be raised for employing basic new technology into their business. Technical training and upskilling, like to their employees, they can raise finance for teaching or training their employees. Development in industrial infrastructure, support to gather industrial inputs, support for entrepreneurial development, support in terms of supply chain and marketing linkages,